My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Let's be one to make friends. I'm just trying to make a little money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC and be nice. Tweet me at Jim Cramer. The market is a child. It's childish in its tempestuous demands, its lack of discipline, its disproportionate sense of euphoria, and in disappointment. And the child is creating monster swings of major large capitalization stocks, the likes of which I have never, ever seen before, ever. Just look at what happened today. The Cramer COVID-19 index roared on the news that the big AstraZeneca vaccine, their trial, it didn't produce something that will save us immediately. The news was genuinely actually good. Yet AstraZeneca stock got hammered, and the stocks that benefit from the pandemic surged. Ultimately, the Dow advanced just 9 points. S&P had gained 0.84%, but the tech-heavy NASDAQ filled with Cramer COVID names pole vaulted 2.51%. Amazon went up 234 points. Tesla's up 142. Shopify 81. Yeah, I didn't make up those. That's real money. Or you can be in the next fund. Definitely childish buying behavior, right? But that doesn't mean it's wrong. There's a lot of money that's put to work every day based on coronavirus inputs, and that's made the action incredibly binary. I mean, we didn't social distance enough in the country. Not enough of us wear masks, and the vaccines take so long. So go buy the ultimate stay-at-home stock. Go buy Amazon like everybody else. Okay, so what really did happen today? Let me walk you through it. Consider the news about the AstraZeneca vaccine. We got an analysis of the phase 1 trial results in a very prestigious medical journal called The Lancet. Phase 1 is safety. That's what they do it for, and the vaccine's safe. It also created a positive immune response, meriting further study for less healthy test subjects. These larger trials are happening right now. All that's good news. That's something we would normally be pretty happy about. Yet somehow it was viewed as negative. So what happened? I think people who bought the recovery stocks all last week and sold the NASDAQ were expecting much more rapid progress, so they threw a temper tantrum, dumping the cruise lines, dumping the airlines, dumping the hotels, and dumping the shopping malls, then swapping into the tech stocks that profit from the pandemic. I want to stress that none of this is political. It's not about Trump. It's not about the governor. It's not about Dr. Fauci. He's throwing out the first ball. How about that? I bet you even has a good arm. He was a point guard for high school at Regis. We don't care who dropped the ball. At this point, the virus is out of control. You don't need a weatherman to know which way the wind blows. I don't care who you want to blame. What matters is that it's real. And with these sky-high case rates, it's going to start hitting people you know if it hasn't already. About 1 in 5 people who get this thing need to go to the hospital, and the severe COVID cases cannot be minimized. This is not a cold. It is not the flu. It's very serious, even if it doesn't kill you. And at least for now, the virus is winning in this country. Losing a lot of other places, winning here. Given the scale of the new outbreak, we need to make a lot more tests, and we need much better infrastructure for contact tracing. That's the only way things go safely back to normal until we get a vaccine. Unfortunately, America doesn't seem to have the political will to make this happen. Again, I don't care about the blame. Maybe it's our leaders. Maybe it's our culture, where a lot of people seem to think that live free or die means give me convenience or give me death. From our perspective as investors, what matters is that unlike nearly every other country in Europe and Asia, we probably can't go back to normal without a vaccine. That's the reality. And unfortunately, you can't force a vaccine. We're going to inject hundreds of millions of people, if not billions of people, with this thing. So we got to get it right. Getting it right takes a little time. And some investors don't seem to understand that. We're not going to get a study that says, while we were checking this vaccine for safety, you know what? Boom! It turned out to be so effective that we can immediately distribute it to 7 billion people. That's a childlike fantasy. In other words, it's not that the AstraZeneca results were disappointing. It's that too many buyers needed a reality check. Once they realized there was no miracle cure, the COVID-19 stocks came back with a vengeance. First, the tech ETF soared. That means FAANG, my acronym for Facebook, Amazon, Apple, Netflix, and Google. Facebook keeps losing major advertisers. It's looking like nothing they do will satisfy the critics. But, you know, it doesn't matter. As legendary internet pioneer Gary Vaynerchuk said in our town hall last week, Instagram is the single greatest ad bargain on earth for small, medium-sized businesses. So the stock keeps climbing. Who cares about Disney? Meanwhile, Alphabet and Amazon got major price target boosts from Goldman Sachs. I mean, $3,000 to $3,800 for Amazon. Whoa! Sent the stocks into the stratosphere. It's amazing how much impact these price targets have these days. It never used to. I haven't seen anything like it in ages, especially for big cap. No, I've never seen anything like it. Plus, confidence is crazy high for these big tech companies. Microsoft reports on Wednesday. Normally, some people would be a little circumspect, but circumspect's out of style now. That's how the stock rallied 4% ahead of the quarter. Hey, why not? IBM reported a good number after the close. Top and bottom line beats, up similar amounts. Software good. I'm hearing a lot of people warn that this action is just like 1999, meaning we're headed for a crash of epic proportions. I'm actually not so sure. My view is that money has to go somewhere. Last week, it went to the normalcy stocks, the ones that benefit from an instant vaccine. Today, it rotated back into the pandemic stocks, which includes big tech. Plus, there's a lot of new investors who are coming in, and they're buying at least good quality companies, not the junk that we saw in 1999. It also includes the stay-at-home names, the cloud kings, Zoom Video, Coupa, Ring Central, How Can I Help You, Fortinet, Palo Alto Networks, and so many others that enable you to work remotely without being hacked. They're almost old hat now. Twilio up 24. Oh, sorry. Remember, we have developed truly a roulette market. You can bet on black, which is instant vaccine, the equivalent of pass and go and collecting $200 because you bypass that stodgy old medicine FDA, or you can bet on red, which is the shutdown non-economy. Both have variants. You can bet black, instant vaccine, or you can put money on specific numbers like the airlines, all of which got hit today thanks to soft numbers, or on cruise ships because they're truly double or nothing. Or Simon Properties, the day trader's dream, because it stands for brick-and-mortar shopping. Or you can hedge and maybe put some money on Shopify, Tesla, Lululemon, and Amazon, while keeping an ETF bet on stocks that do well if the economy reopens. If you believe we're headed back into a lockdown, but the government will give us another round of stimulus, well, then you buy Walmart, Dollar General, Dollar Tree, Target. Lockdown winners that benefit when Washington prevents people from going broke and, of course, gives you the payroll tax cut. Oh, yeah. Now, if you think this is all fanciful, what I need you to do is do what I do. Get up at 3:30 a.m. and watch the crawl beneath the screen. I'm not going to get on the floor today because it's brand new soup. You'll see voracious buying of the recovery stocks, as well as a smattering of buying in the tech stocks like Zoom that roar on anything short of perfect vaccine news, something we're never going to get. The bottom line, remember that the Cramer COVID-19 index, ones that do better with COVID, represents close to half of the S&P. But more importantly, when you lump in the financials and healthcare, now you're talking about, which don't go down on this, you're talking about 70% of the market. They do the benefits from the pandemic or works either way. Well, the beneficiaries of the pandemic, they're the winners because the pandemic is also winning.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.